Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, we always like to start off with our disclosures. Any symbols that you say today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we talk about today are for informational purposes only. Future results are not guaranteed. And finally, and most importantly, any investment decision you make is solely your own responsibility. Trade at your own risk. We do want to start off by letting you know about our video curriculum. We have a great high probability video course that's broken down into 3 categories. We go over the basics, what is technical analysis, chart patterns, money management. We go over all of that. Then we go into the second part where we talk about your trading plans, what are the different components, how to choose the right trading plan. And then we go over in our third video different high probability trading setups. We don't charge $2,000, $3,000, $500 like many places because we don't believe it's the system. We believe it's the mindset that changes your trading results. So we want to give you the information so that you still have an opportunity to change your mindset through coaching. So anybody that's been with me know that I always like to start off with a cartoon or a little quote. And today's quote is from Mark Twain, which says, "The lack of money is the root of all evil." Now, we've all heard that the money is the root of all evil, but Mark Twain put his little twist on it and said, the lack of money. And if you really think about it, how would your life be different if you didn't have to worry about money? What would you do? What things could you do? How much more time would you spend with your family? Where would you go if you didn't have to worry about money? And in today's economy where people do have to wake up and provide with their family, to pay their bills, to take care of their obligations, they're forced to make certain decisions that take them away from their family, decisions to go to jobs that they do not like. And then some people make even worse decisions because they either don't have a job or whatever, want somebody else's job, and they make bad decisions. So money may be the root of evil, but the lack of money is truly the root of all evil. So, you came here today to learn about Forex, and what we want to do is go ahead and break this down into several areas. We're going to talk about what exactly Forex is. We're going to give you some interesting facts about Forex. We want to share with you what are the major Forex currency pairs, and then in the end we want to talk about, well, how exactly do we make money with Forex? So what is it? What is Forex? Well, basically, it's the foreign exchange market where currencies are actively bought and sold. At the same time as you're buying one currency, the euro, you're selling another one, the dollar. That's why it's not like just buying or selling Apple or any stock on the NASDAQ or the S&P 500. There are actually 2 currency involved, thus the name Forex pair. Actively buying one and selling the other. Of course, what this allows us to do is to give value to each currency pair, and it allows us to convert one currency into another. Some interesting facts about Forex. Well, basically, it's the largest financial market in the world, which also means it's the most liquid market in the world. The reason why it's important to be liquid is that when you want to get in, or if you want to get out, you want to make sure it's easy. Anybody that's been involved with trading the stock market for a while knows that there are, when you're on margin, when you're borrowing a stock, sometimes you'll see from your broker, hard to borrow. Well, with Forex, it's pretty easy to get in and out of your pair without being so much concerned about time of day and volume. It's very liquid, a tremendous amount of volume each day. And more importantly, it's open 24 hours a day. And you'll see that for the most part, many of the most popular currency pairs, and we'll talk about this later, are based off the dollar. And we can see here that the dollar is involved in 90% of the Forex transaction. Now again, we talked about it being the largest and the most liquid. And in our graph here, we can see we have some of the major stock market exchanges in the world. We have in the States, the New York Stock Exchange doing $74 billion a day, the Tokyo Stock Exchange doing $18 billion a day, and the London Exchange doing $7 billion a day. But even if we combine those together, it doesn't even come any close to seeing how much money. That's a trillion. That's 3.98 trillion that is traded each day in the Forex market. So as we're talking about, the dollar is the base of 90% of the currency pairs. The major currencies that are involved in these forex pairs are the US dollar, the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, and the Swiss franc. Now, there certainly are plenty of other what we call exotic pairs. The New Zealand, there's a ton of them, but these are our major pairs, and these pairs together uh, add up to 85% of the daily trading volume that we just talked about. That almost 4 trillion daily volume. These currencies are considered the most liquid because they are traded so much. So how exactly do we make money in Forex? Well, there's two things we have to learn in order to understand how to make money. Now, as we said, we're going to have to put another video together on why you should trade Forex. But right now, we want to talk about what it is. And the first thing you have to know if you're going to trade Forex is what exactly is a pip. Well, pip is the smallest price increment in forex trading. When you buy a stock, Apple, and we know Apple is $300, you make money or you lose money based upon if it goes up a penny or down a penny. Well, forex, it's by the pip, and the pips are usually at the 4th decimal point. However, for the yen, it's actually second. So we can see in an example, we see 1 pip equals, and there's again our 4th decimal point, and 2 decimal points for the yen. So as that number goes up, and you're long, you're making money, or if it goes down, you're losing money. We're not looking at the actual whole numbers. We're looking at the decimal point. Now, in addition to understand pips, you also have to understand what exactly is a lot. Now, the lot is the standard unit size of each transaction in Forex. Typically, one standard lot equals 100,000 units. In other words, one standard lot controls $100,000 of that base currency. Many brokers, however, allow you to break that transaction into smaller lots, and we'll talk more about that when we get into why you should be trading Forex. But let's take a little closer look at what we have here. We have our Euro chart, and we have some bids for you. And you can see on the top there, because we only have $10,000, we're trying to control $10,000. That is a micro lot. So therefore, as the pip moves up one or down one, we're only going up a dime. In our bottom example there, we're controlling 100,000 of that currency. So therefore, every pip moving up and down is $1. So it's just like trading a stock. It's just that there are two currencies involved. Again, we are buying one and selling the other. What's important to know about that is when one is stronger, that's going to move that pair up or down. So in the euro dollar, when the dollar is strong, because it is the secondary pair, we'll see the euro dollar go down. When the euro is stronger, because it's the primary pair, we'll see the euro dollar move up. So again, we have to be concerned both about the pip value and how that's calculated, and secondary, we have to know about our lot size to make sure we are controlling the correct amount of currency. So if you want to find more of our videos, you can find us on Facebook, YouTube, and Twitter. We have a page on Facebook, Are You Financially Literate? And you can find us on YouTube and Twitter as Move Up with Mike. Again, in addition to our paid course, we do want to give you an opportunity to see our free 5-part video course on high probability trading. You can find that at learn-highprobabilitytrading.com/free video. And by looking at this free video, we hope you get a gauge to who we are as coaches, and you'll be interested again purchasing our actual 3 video instruction, video curriculum, or work with us as coaches, and how we can help you. Again, it's not the system, it's the mindset. It doesn't make a difference what system you buy, what indicator you're following, what newsletter you purchase, or what room you're in. Even if you can identify those high probability trading sets, what's important is your ability to pull the trigger on a consistent basis, disciplined, focused, and without emotion. And that's what we can do for you. We can give you that psychological capital that you need to develop a trader's mindset, to follow your trading plan day after day after day, so that you can be a consistent and profitable trader. Thanks, guys, and I'll see you next time.